This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Tuesday, another day. We look around the world to see what's leading what at this point. I would say pretty quiet markets. Some having a little bit of a controlled pullback, which makes sense after the size of the moves that we've seen over the course of the multiple weeks. In Europe, I think the DAX is down like 0.2%. If you take a look at the HEDJ, which we show you as a proxy for Germany, that gave you a really nice breakout move above this 58 to as high as almost 61. So if you want to potentially buy a dip, I think somewhere close to this 59.80-ish would be a good, buy the dip if you sold the strength, because this thing hit 61.15, and I would think this has to hold in order to keep some momentum there. As far as Asia, not a hell of a lot going on. The ASHR is kind of just trending higher, pretty quiet. You don't hear much about this in the news. It's more of like a stable spot now. You have this rising channel here, which we're above. It resolved this lower wedge here to the upside, and it's still just out of the way, trending higher, and it retraced a decent amount. So the question is, can it continue up into year end closer to 4,000, or at some point does it break this rising channel to create more volatility? At this point, it's just trending, and you don't hear much going on out of there. As far as our market's concerned, the S&P spent a day above the 200-day. Hey, look at that. We've had this 4-week move with stair-step type action, holding higher every step of the way. If you look at the SPX, you will see that I know there's a lot of bears out there saying this can't last. Well, you know what? You might as well watch the price action. Here was your August 24th lows. Here was your double bottom with that red dog reversal right there, and then another one on Jobs Friday. Then we cleared this lower pivot, cleared resistance. This is when we cleared it the first time, came back, retested the 8-day, and held. Continued higher, retested the 8-day, and held, and then took back the 200-day, and now we're on this little perch up here. So the question is, how long, do we need to digest above this? Because we are extended, from all these moving averages. So right now you have 2,058 to trade against. Okay, if it holds above this, that would be really, impressive by the bulls. I wouldn't mind seeing actually a little bit of a pullback towards this 2040 area, but we'll see what happens. But at this point, inside day yesterday, we'll see if we digest higher and continue, or work our way towards this spot. And if we were to hang out here, I guess your next real level coming up is closer to 2,100, as we've penetrated through a lot of resistance that people didn't think the market could do. So I would say in order to get back through that 2,100 and go higher, like I talked about on Bloomberg, there has to be things that happen. Otherwise, we probably just had our best 4-week move behind us, and it's going to become choppy, and we're going to pull in a little bit and just range out and have to really be so stock specific. In order to get a bit more action towards the highs, you're going to have to see oil, I would say, get a little stable. The USO, I talked about this false breakout here. Okay, you had this quick little move, okay, above this prior high. It did not last, giving you a false breakout appearance. And then you had one more spot where maybe it could hold and then go again, and it didn't. And now yesterday, it broke below this 1420 that we've talked about, and it's back below all moving averages. So if oil continues to leak, volatility could rise, and it could become a focus again as it approaches back down towards, the lows. Oil itself broke 44. That was important. And then if you look at the XLE, which we've been talking about also, to figure out if there was another move coming, this sector's been battered and bruised. It's been a laggard sector. No one in my community or a lot of people were not long this, because what did it do? It broke the 8-21 day. Then what did it do? Went below the 200 day, broke crazy support, and then down here there was an opportunity. So the question is, would there be more opportunities? So you take a closer look at the XLE, and you will see you have this range, okay? And this range and that number that I talk about in my morning call, or even my note, was 67. So if we break below 67, if you have it on as a trailer, you got to reduce, because you have this upper area. It gave you a really nice trade as it ignited, but the question was, can it continue higher and go back to the 200-day like other sectors? Can't do it with oil leaking. So right now, if that was your out, you could always revisit. And now the question is, how far does it go down? This was prior resistance, so I guess actually it's already there. Right down this pivot, 66.57. Below that, it can continue down. Here is the gap that hasn't been filled, and that comes a little bit closer to 64.59. So right now, oil and the oil sector is not participating the way it has to broaden out and help the overall market. The bios a little bit better than they've been in the course of the past few weeks. If you take a look here, there's not a lot of momentum, but not quite in the danger zone the way it was prior. This too, you look at this, why, how could you have gotten out of the way? Everyone says, you look back and it's a lot easier than looking at it when it happens, but we do give you a play-by-play. This is when, your active trend broke. This is when macro support, or not macro, upper support got broken and then retested right here. Remember that head and shoulders pattern also, left shoulder, head, right shoulder, and that was your first clue to get out of Dodge before this move. Then he rallied back, had this ascending channel, broke it below right here, this 351, and now look where it is. So some think this is a bear type flag, which, definitely looks like it could be kind of like this. The question is, how long, does it take in order to follow this before maybe breaking like happened here? But, at this point we don't know. It is coming into, a stronger period. We'll see. You do have defined resistance around this 320 to 323. If this were to get above this, you know what? Maybe there's a trade back towards 330. Yesterday it did give us some action, and if you want to, be in this versatile level, I would say for it to be strong, and it's got to hold this 311. So maybe if you're long the IBBs, being long versus 311, if it happens to trade through this with authority, maybe you get another trade. But back below this, it's back in the vulnerable area, kind of like the XLE at 67. The Qs have just been, best in breed. Look where they are. They're the best acting sector out there, which is good for traders. Traders love when tech leads because you have fast-moving companies, high momentum charts, et cetera, et cetera. At this point, see if the Qs can continue to hold the gap here at 112. That's a big gap. It's very extended from the moving averages, so it could use some time. If it holds that gap and you've been short tech, you better be careful, because that means they're not really letting you out here. And the next move above this 113.24 could be back to highs on year. This should be the first sector to make highs on year. The Qs are right there. So again, you probably want to be long more tech than shorted, considering the strength there. The banks haven't really done much. Can't really say much here. Kind of looks like it's in like kind of looks like the spiders. Just took back the 200-day below resistance. Actually, the banks are a little weaker than the spiders. But at this point, I guess you could say that as long as the XLF stays above the 23.95, you might want to stay with it. It's a tiny bit extended, but it's been rallying up, even though this quarter the bank's earnings weren't so great. You look at Goldman Sachs, remember that bad report? Well, it kind of engulfed it. Remember that day? This is the day it opened below this, and we said, see if it could hold this spot, and it did. And then it shook it up right there, and just choppy. It could get back up to here, but how it gets up here could drive you to drink, and it's only on a Tuesday, so you might not want to be drinking on a Tuesday. Citigroup, just to show another that we've been focusing on, got downgraded by Morgan Stanley, didn't fall apart. If you're still in this one, I'd say give it to yesterday's low. This is 52.75. If it stays above that, maybe the market wants to continue. This is somewhat trending, and you just can't expect too much, especially in these banks. If for some reason, which I don't think is going to happen, the Fed has their statements tomorrow, they are a little bit more hawkish and dovish, maybe that gives the banks an overall lift, which would help the S&P. As far as the names that have been on the move, first let's talk about an earnings one. Let's talk about BABA. BABA was a name that we were very active in when it first came public, gave us a great calculated move to 120, and then it got caught in a downtrend, and it's been a sell on every rally. The funny thing is, though, once Barron's came out with that report that it can go 30% lower, I don't think it's seen a down day. That's why you don't trust analysts, you trust the action. And if you go to BABA here, I think right in here is when they said it can go 30% lower, and then all of a sudden, boom, look at this igniting bar right here. This igniting bar basically took back this previous low and took out this lower range. But the most important part of that is it held higher. You know, an igniting bar that holds the top third of the range usually ignites another move. Maybe it's just an oversold move or a counter trend move, because if you look at where BABA was, you know, it was a heck of a lot higher. But if you shorted this based on Barron's, chances are you probably couldn't remain in the game all the way up there. So now it came out with a very strong report, and I think it's trading right here near 84-ish. So I would say if you didn't buy BABA here or buy BABA here or even buy when it took out this flag, chances are you probably shouldn't be chasing it up into this 84, 85 area. The 200 days right here, let it put a gap in and then see it rebuild. If anything, I think maybe 83 to 84, you fade a little bit, you go a little short, considering from 60 to 85, probably not a bad spot versus resistance to sell some. But we'll see how, just see how the action plays out today. If you are going to get short versus a 15, 30-minute high. Don't just play the, cost average up game, because who knows how silly this can get. Guys yesterday tried to do that with BIDU. BIDU I've listed as a strong name, put it back on my morning call list, I think early this week, right around here. And if you did get long when it got above this, you got rewarded yesterday. Now see if this could stay above this gap, and that is 165 to build for its march up to the 200-day. C-trip I also had on there, and didn't know news was coming, but I guess somebody did. I just said that you had a nice, look how long the space was in, from June all the way across, above all the moving averages. So what do you want to be when things are above all the moving averages? You'd rather be long than short. And then boom, you had this big news. At this point, it just needs time. Some of the other names that we said, in order for the market to hold up, we have to see how they get treated, because, Amazon and Google were both sold, on Friday. Great reports, great numbers. They came a long way. They sold it down. But then yesterday, they held their earnings gap. So some guys got long versus the earnings gap and now are in it for a swing trade. And some are looking for day trades, and some are looking for technical buy areas. So let's just take a quick look at Google first. Google had its big gap up, okay? It never traded back into the gap. So if you're long Google, keep it in your swing account, okay, and be long versus this 717. Just give it some space if that's what you're doing. If you're looking for another trade to get back to the post-earnings high, it's going to have to get above and stay above 734. Might need time. Just remember, last time this did this, okay, it looked really good, and I remember because I remember buying it through here. And then you had this topping tail right before 3 harsh down days, came back above, and then filled the gap. So it's not the easiest trade. That's why you want to make sure you have levels. So right now, if you are in for a swing, be in it versus this 717.94. And today it could be off $1 or so with the futures. If it trades through this, see if it could work its way back towards the highs here, which is 752.50. And then if it does it correctly, where it doesn't do a breakout failure, maybe there's an additional move, into year end, and that goes the same for Amazon. Amazon basically started out a little weaker yesterday, and the shorts couldn't pound it down on the Financial Times article. Came up, already took back half of that. So at some point, it might take out this high. So if you're in it long, be in it long as a swing, tier 1 versus 595. If it happens to trade above yesterday's high today, maybe you get a push for a trade, and that is 609. And then your real technical buy area for continuation, which was a pretty big sideways consolidation for 3 months, would be a post 619.45, and I do think it's going to be an Amazon Christmas, and this high right here will not be the historic high in my humble opinion. Then you had like 2 broken names that gave you a day one. Remember in my morning note yesterday, I'm like, maybe Netflix has been holding support. It gives you a push higher for a trade in a broken name. Well, that did happen in Netflix. Netflix gave you a trade. This doesn't look like much, but it was cash flow. Here's when it started poking its head up after holding support, and then boom, gave you a decent day. It's off a little bit this morning. Maybe it goes from red to green and pushes into this earnings gap. So see, maybe there's another day here where it can go green and go above 103.31, and then you could sell a little bit. And if it happens to fill this gap, maybe it'll come back on people's radars. Tesla, broken name. It's been broken for a while, ever since this potent down move right here where it took out this upper flag with that outside day. Outside days lead to down moves like this. Last time we looked at it, there was a small trade here, okay, that gave you a few shekels. And now we'll see if it could happen again where, a little small support. If it can get above this small spot, just be careful because, they fell quickly. If it gets above 216, maybe you could see a few points, 3 or 4 to 220 and get an active trade. So, I guess let's talk a little Apple. Apple, I love trading it every day. I've been trading this stock for years. And I tend to always like to be more long than short, and that's the way I am comfortably. Coming into this quarter, though, the stock has lagged. It's given us some good trades. Last week, remember, it gave us a great trade from 112 to like 117, and then even went to 119. Then yesterday, you had to get out fast. So the question is the weaker than expected report priced into the stock because this stock has not participated this year? Nobody knows. So we have to wait for the actual stock action there. My concern is, the 6S. I don't know one person that went out and bought the 6S, from family, friends, people in the office, this and that. Whereas, the 6, when that came out, you couldn't get it for months. Or the big one. Remember Bengate, et cetera, the demand was so high. So I don't know if that's priced in, but I have a feeling the iPhone number can't be so great. So either they're going to come out with a huge buyback, or they're going to talk about the fourth quarter, which, Christmas tends to be their best. But again, watches are insignificant. You have the car to this. I'm just a little hesitant on Apple. I'm sorry. If you look at the chart, not much going on here. This was the range that took place before breaking below it, okay, which was way back when. And this actually, thank goodness for this, because this gap down on last quarter's earnings is what gave some fuel to show you that this range could break to the downside. And if you remember, this broke to the downside just when the market did. So that gave you some clues. So now the question is, do you have a short-term inverted, okay, a head and shoulders pattern where it already broke above the neckline and is holding it to give you a move back into this area? Or some are pointing out the opposite, where you have a big macro, okay, head and shoulders pattern with the left shoulder, this being one huge head, and this being your right shoulder. So at this point, I truly don't know. I'm going to just give it some space, not have options, and wait and trade. I think the options market's pricing in a $7 move, so if they happen to like it, boom, or they trade it to the upside because they want to squeeze the shorts more across the entire market, then you probably have a move up towards this 122-ish area. And if they miss and they don't like it, et cetera, maybe it comes in and tests this 107 area because it's at 115. So, resistance on the upside, 121.22, support 107, 108, and then we'll see what happens a little bit closer to the report. And if you go into social media, Twitter is announcing. This one I just think is a little bit better. There's more, like just in general, there's a lot of activity around it. You have Balmer in 5%, you have the Prince in 5%. It's been battered and bruised, and every analyst hates it. So I feel like sentiment's so bad around it with that Morgan Stanley report that if their MAUs aren't that bad and they show that they could use their existing base and make money off of, maybe there's something better and the risk reward here. So I'm in some calls. You look at the stock. It's been battered and bruised. If you remember right out of the get-go, it went as high as 76, and it's really been somewhat, crushed on a macro level. High, lower high, lower high, and this was the last, spot it broke down from. So if it was anything decent, I would think it could at least get up to this 35, okay? And if you look recently, just technically, I think it's been acting a little bit better here, where it's defined. Okay, let's open it up a little bit so everyone could see. Right here is when a lot of us were trying to get a pre-earnings run above this 31.50, and the Morgan Stanley analyst batted it down to the 21-day. So if you stayed in it, great. So I'm in the $30 calls, and I'll see where it is, and maybe there's a trade today. They want to squeeze it above this 31.50 first, and then we'll see after the report if there's a trade there after hours. And this would be a decent spot. If they miss, and you have calls and they go worthless, your risk is premium paid. It's better than sitting in tier 2, tier 3 stock long and then going back into the penalty box. pay a little premium. Facebook, I'm also still in those calls. You know, this has been awesome. Okay, this, you know, you had your red dog reversal re-entry right here. You had your momentum trade long above this, and then I think we bought the options right in here, and they've more than doubled. So I have a small amount left. If it rallies, say, towards 105, I'm probably just going to get flat the options because earnings aren't until next Tuesday. We're a little bit extended from all the moving averages, so I'll revisit. If it's looking to do some kind of cute reversal where it pushes above yesterday's high of 103.81, puts a tail in and comes down, maybe that's a little bit of a sell strat. But yeah, you're not getting more than a day and a half here recently. So don't try and be too cute. This has been a very, very strong stock, and congrats to you if you've owned this thing. You know, you guys, I don't know if you guys have been following me for a long time, but do you remember back on this weekly chart when I had a segment with Kramer right around here talking about how I thought that Facebook would get back to the IPO highs right here. Okay, right in there. And you know what Barron's did? When it was a 25, they said it was going to 15. Same thing they did to BABA. And I got hate mail, and then PS, you know, within a month or so, boom. And it's been in an uptrend since where, you know, this has built wealth for people. Okay, and hopefully it's done some good things for you besides just trades. And lastly, just to close it off, let's look at the TLTs with the Fed tomorrow. They're kind of tight right here. I haven't been very active at all with this. The last time we really pointed it out was this pwned down day and then this outside day, and now it's pretty tight here. So I'm not sure which way it's going to break, but with the Fed coming out and the potential of maybe December, or maybe next year, I don't think there's going to be anything great action-wise regardless, but you know, you should know that you know, this sometimes tells us what's really going to happen, and if it can get above this 124 and stay above this, chances are the market believes that there's no December rate hike coming, and the chances are probably first quarter next year. Then who knows? We'll see what we'll have to see what the market's doing, but it's pretty tight. Here's your support 122. This is your 124 area, and you'll see, you know, what goes on there next. And that's about it. You know, another perhaps inside day in the S&P where you'll get a lot of stock movement. You know, let's see if what BABA does. Maybe we can get a cute fade, you know, into up $8. Let's see if the IWMs could build still to maybe play catch up, which would help the market. Same thing with the bios. Tech has been on a tear. See if it holds that 102 in the Qs, and keep taking trades. And you know, quick feed, I think, in this market right now. After an 11% move from the lows, doesn't mean we have to fall apart because shorts have been crushed. But if you start chasing up here and we get a little bit of a pullback, chances are you might not be able to hold it. So I would love them and leave them if you could find the candidate for that both ways. Have a great day. I'll see you after the close.